Yes, sir. We are now on to the A plus strategy setup and the rules. So I will like to point out, and I did mention this in the boot camp as well, that this strategy is not for the weak. Nah, I'm just playing. No, it's a really great strategy, but what I mean by that is that it is a strategy that you have to let it play out to give it time in order to do what it is intended to do. At the same time, this strategy necessarily isn't for Apex accounts. So if you are trading Apex accounts using minis, this isn't the strategy that you want to run on those accounts. The reason why is because sometimes with this strategy, it goes into a lot of drawdown initially, or it will get into profit initially and then go back to around break even and sometimes drawdown. And Apex can't handle that because the Apex accounts, um, their rules, they don't allow you to sort of do that, meaning they have what's called live drawdown. Excuse me. So, what does that mean? That means, let's say your account starts at $0, right? Let's say, well, not $0, but zero balance, and you have a $25,000 account. So let's say it's brand new. So let's say you enter this trade and it goes up $700, right? Now you're in the green in Apex's eyes. You are in the green $700. Now let's say $700 is TP1. This strategy, you're not really doing anything until you get to TP2. So if price gets to TP1, which is around $700, and then it pulls back and it goes back to break even, let's say, in Apex's eyes, since they have the live drawdown rule, um, that means that you actually lost $700. So even though your account is not in the negative, in their eyes, you actually lost 700 because whenever your account starts at zero and it goes up $100, your initial drawdown also goes up $100. But if you go back down 100, this initial drawdown does not move. This is one directional. The drawdown is one directional. It only goes up until you reach the threshold, and then it stops, and then it doesn't move anymore. The drawdown never goes back down. So that's what I mean by this strategy is not for those type of accounts because most of the time it can't handle it. If you are trading micros, you can look to do this strategy using micros. Or if you have a large account with Apex, like a 100, 150, I think they have a 200 now and a 300. If you have those accounts, then you could do this. I still recommend no more than two contracts, really just one. Whenever I do this and I want to take off of my position, I might run something like 12 micros, and then I will remove 10 of them at 2P2. So that way I can get the full one contract because 10 micros equals a contract. I will remove that at TP2 and let the remaining two micros run up to TP5 or wherever it goes, right? Anytime price gets up past TP2, let's say, for example, price gets to TP3, I move our TP2, it moves up to break even. Once it gets to TP3, I move it up to TP1. Once it gets to TP4, I move TP1 to TP2, and so on and so forth, right? I'm always trying to trail that trade to actually lock in as much profit as possible. So let's go over these rules. So these rules, a little bit about the strategy is actually just a whole bunch of different confluences at the same time. that give you that sort of confidence to be able to take this trade and just let it play out. So the first thing what we want to do is we want to determine the bias, right? Or the trend for the day. So the trend is kind of easy. You can kind of just look at the charts and see, okay, are higher highs and higher lows forming, are lower lows and lower highs forming, or is it sort of just going sideways? It's just kind of ranging back and forth. The bias is something that can help you sort of determine like a temporary or a long term trend um, for the day. The way I sort of do bias is I will look at Asia's session and then I will look to see what London did in reference to Asia session, and then I would sort of make a determination off of that. So what does that mean? That means that if Asia made a high and a low, right, which it always does, what did London do? If London took out the highs only, then I am bullish bias for the day until NQ shows me something different. If it took out the lows, same thing. I am bearish for the day until NQ shows me something different. If it takes out the lows, and then the highs after, I'm expecting New York open to do something similar, either take out the highs and the lows or follow suit and take out the lows then the highs. If it's sort of just ranging in between, it doesn't sweep anything. That's gonna, to me, that looks like it's going to be a sort of a choppy day, and it's really not going to do much. But the bias is what I always like to say: is don't get married to the bias. The bias could change like that, especially with NQ. This is what this strategy is for. Specifically, is for NQ. It does work on ES and like YM, which is US 30, but I haven't back tested it as much as I have with NQ. So if those are something that you trade, you want to back test it a lot before implementing it into your daily agenda. So the next thing would be look for any news happening that day. Of course, this is with any strategy that you should be doing this because this can affect your trade, especially if it's a red folder event. You don't want any surprises whenever you're in a trade. Um, so basically, now after those two key pieces, now we get into the real rules, which is price needs to enter into and then exit a reversal zone. So you'll see this term thrown around a lot, which is RZ reversal zone or the change of direction zone. Either one, they're both the same thing. Then after that happens, price needs to cross over the 50 SMA, which is the simple moving average, not the EMA. A lot of people get that one confused. And you want it to cross over VWAP. These, it says no order necessary. That means that it doesn't have to cross the VWAP first and then the SMA, or the SMA then the VWAP. Those are interchangeable. It could cross as long as it crosses both. After that happens, you want to look for market structure shift, which is a change of character or a break of structure. After that happens, then you want to look for a fair value gap that happens. A big displacement candle is always best. And then you want to draw out your box, and then you want to place your entry either at the top of that box or the bottom, depending on which direction you're going. So if you're looking for longs and you have a gap, you want to place your order at the top of that box. If you're looking for shorts and you have a gap, you want to place your entry at the bottom of the box. Stop loss is always going to be, sorry, stop loss is always going to be at the previous swing low or high, depending on which direction you are going. Um, as far as TPs, this strategy, I have found that TP5 hits quite a bit. And so that's why we have 5 TPs. So what do we do with these TPs? When price reaches TP2, that's when we shave some off of our position. We move our stop loss from where it was originally up to break even. I like to do break even plus one because I am cheap and I don't want to pay the commissions. So that's what the plus one is for. So you could do the same or you could just move it to break even. But I don't think anybody would be sort of mad at having an extra $5, right? So next, if the trade is too big, you want to switch TP2 with TP1. What does this mean? That means that if the trade, let's say, for example, if TP1 is already a large amount, like let's say $1,000 for TP1, then you could use TP1 as your point where you want to shave and move your stop loss up to break even. That's going to be subjective to what is big for you. For me, it anything pretty much over 1,000, I am switching TP1 to TP2. And again, this strategy is not for Apex accounts unless you're running micros or you have a very large Apex account. And the main thing, which I'm glad this one is bold, I actually need to increase the size of this one. This is very important, and I'm going to change it. I'm going to change it to red because it's very important. This is one of those strategies that you have to let play out because sometimes the strategy or the setup can take 4 hours, 5 hours for it to actually do something, especially if it's a day that's just sort of consolidating. It's not really doing anything, but you have a setup. You just have to let it play out. I think 2 weeks ago now we were in an A plus trade and it took 4.5 hours for it to hit TP1. It literally was just up and down for 4.5 hours. And then we finally hit TP1. By the time it hit TP1, it was sort of like end of the day. So I think a lot of people just closed out the trade. Also, you want to let the trade play out because there are times when we are entering the trade and there's no drawdown, it just immediately taps us in and it just goes to the moon, right? Or it just sells off in our favor. There are other times when it will get to TP1 and then it's looking good and now it pulls back all the way to break even, possibly even some drawdown, and then it goes up to TP2, we shave off, and then it does whatever it does after that. And then there are other times when the price will tap us in and immediately go against us and draw down and get within one or two ticks of our stop loss and then go all the way back up to hit TP5. So is you don't want to stress yourself out. This if you're sitting there watching this is really going to test your patience and your psychology. So um, I would strongly recommend just if you see a setup, take it, put your trade on, walk out the room, watch a movie, just let it do what it does, and just let it play out. And those are the main things that we look for. So let's go over to the charts and look at some examples of this. All right, so now we are on the charts. So let's get right into it. So in order for this strategy to work, we know that we need price to enter into a reversal zone, cross over and exit that reversal zone, and cross over 50 SMA and VWAP, not in any particular order. And then we need structure and we need a gap. We need price to come back and tap us in at that gap. And then we put on our risk to reward, and those are going to be our targets up into TP5. So the reversal zones that I use are based off of a 1 hour time frame. 1 hour time frame is very good because we take trades on a 1 minute chart. So a 1 hour is, of course, a considerably higher amount than a 1 minute. So it actually plays a lot into our favor. So I do remember one of the questions from the boot camp, like what exactly is a reversal zone? And basically, to me, how I like to describe it is that it's support and resistance zone on steroids. That's kind of like the best way to sort of sum it up. Now, like support and resistance, you have to wait for a certain amount of touches and wait for price to come back. And this is very similar to that, except for it's only on the hour chart. That's one that I found that works best. And I used to use the 4 hour, but the zones used to be kind of big and it would sometimes overlap with the 1 hour. So I have sent y'all a video on how, when I did a session with the group, excuse me, when I did a session with the group on how I chart these. So you can take a look at that as well. And real quick, I can go over it. Basically, you want to scrunch up your chart and go far back left. Oh, these are still here from earlier. Nice. So you want to go as far back as possible. If you're on NinjaTrader, you can go back to 1990 if you want to. If you're on TradingView, unfortunately, you cannot. So those are the limitations of your platform that you choose to use. But it's all the same. So go back however far that you go back, and that's where you want to start, because you want to start from the past and work your way up to the present, because a lot of these zones still carry weight and they will actually work in the future, and it'll save you time from drawing them in the future as well. So what is a reversal zone is basically where the trend is changing directions on a higher time frame, which in this case is going to be the hour time frame. So you see the candles are going in one direction, and then you wait for it to sort of pivot and then go into another direction, and so on and so forth. Just like these arrows are suggesting, um, anytime these arrows are changing directions, you want to have a reversal zone somewhere near it, right? So it's pretty simple when you sort of break it down. Now, one of the key things, you'll see it in the video that I made. One of the key things that I like to look for is if this price was going, like for example, it was going lower. In order for this new direction, in order for it to actually be an arrow that's going up now, there needs to be at least two new higher highs that are formed. So we see that price was going down right here. And now we have this higher high right here, and this one and this one. So this one actually had three. So that's why I consider this whole thing now going up. And that's why you see the reversal zone right there. And now, in order for this arrow to be going down, I need to see at least two lower lows. And we have a lot of, or not lower lows, lower highs. So we have a lot of lower highs here, as you can see. And that is why price went down all the way to here. And we have a reversal zone that is close to it. So that's kind of how I do it. I go in a lot more detail on the video, as you will see once you watch it. But one of the key things that I do tend to do at these reversal zone levels to make them more accurate is I will actually get down into it, zoom all the way into the reversal zone, and I match it up to the tick. I make sure that my reversal zones are very, very precise, because I remember saying in the boot camp, I'm ex-military, so I like precision, and I like things to sort of make sense to me. So that means that this zone was actually marked very precisely by, I actually look at the open, high, low, and close of the candle that actually started forming that zone. And since this is a top reversal zone, meaning that the price was going up, made a top, and then switched and went down, that means that I am getting the exact tick of the highest point on that wick, which is in this case 16 421 75. And then I like to look for a double top, since it's a top reversal zone, right? So I like to look for a double top, or if there's not a double top, I'll look for a large bearish momentum candle where actually you could specifically see that price started to sell off. So we could see that we had a double top. I'm not counting the wicks. I'm only looking at the body. We had one right here, and then immediately after it gave us this candle. And if you look just to the left, we have a lot of bearish candles, even almost another double top, a relative double top right here. So this is a great area overall. But that's how I like to make them precise. And to me, it actually pays off a lot when you do it that way. So, and when you start from left to right, again, these sort of play in your favor in the future, because you can see like we drew this one for example, let me show you one on what I mean that played a role in the future. So this was a long time ago. So let's get more accurate. So we got one right here, right? So if we look, we have this one. We have this one right here, right? So let's look at what this line specifically has done in the future since we drew it, which this one was from May of 2024. So this one's pretty recent. It's this year anyway. So we see that price actually respected it right here, played around it right here a lot, completely broke through it right here, sort of respected it here, completely broke through it, respected it, almost respected it. But you kind of get the idea on how the reason why I like to start from the past and work my way up to the future. So that's about reversal zones. So the reason why we went over that is because now when we are on the 1 minute, we know that price likes to react off of these zones. We don't really know the direction it's going to go, but we can kind of have an idea by looking at these other confluences like BWAP, 50 SMA, market structure, and gap, right? So and bias and trend that also plays into it. And now that you know silver bullet, you can actually look to add that as an extra confluence as well. Let's say, for example, we are in a long on or we see a potential long setup with A plus, and also at the same time there's a silver bullet that's reversing for a long, right? So let's say price came down to here and then it's going up. That's the same type of strategy that silver bullet is, and that's just the extra confluence that you can add on to the A plus. The more the better. So yeah, now, some caveats is I like to look for A plus between specific times. Those times are 10 a.m. and 12 p.m. Eastern. That's when I kind of like to look for my setups. Now, you will, however, find some setups during any time of the day. I'm not really up all night, so I don't even, when I back test, I don't even look to see what it does on times that I'm not personally on the charts. But we will go over just any setup that happens. That way you can kind of just see, and then you will have to decide at what time you want to trade, and then you could look or start back testing and make your own decision. So I'm just going to be showing like examples of price going in and just following all the other rules, not time based. So rule number one is price needs to enter into a reversal zone. So we see here that price actually, in fact, did enter into this reversal zone, and then we look for it to come out. Once it comes out, it needs to cross over the 50 and SMA, or sorry, 50 SMA and VWAP. So we can see here that it crossed the 50 here and VWAP here. Now, after that, we're going to look for market structure shift and a fair value gap. So after VWAP, we're going to look for structure. And we have structure. So VWAP was crossed here, but it's just a wick. So this is actually the structure right here. And actually, was this the same? Yeah, this is actually the same one as the silver bullet one we went over. But it's all good because it is a setup, and we're going to go over all the pros and cons of this particular setup. So swing high, we have structure, and the same candle that made the structure made the gap. Boom. So that would have been an A plus setup right there. And of course, this one tapped in, and it did it tap in right there? No, it did not tap in right here. It only tapped in over here. So after it tapped in, you may have got like maybe 100 or so in profit, and then it just kind of went on to lose. So let's look at why this is not. Um, it is an A plus according to the rules, but it's not really the best A plus. Why all A plus setups are not created equal. So first of all, let's look at the time. So this time is 3 a.m. So 3 a.m. is London. If you know anything about London, London can be very indecisive and it does a lot of fake outs. That's why I don't recommend trading this particular strategy during London session. Another thing is if we look at the 50 and we look at VWAP, they are pretty far apart, and also the VWAP is pretty far down away from the reversal zone. So there's sort of levels to it. I remember going over this in the boot camp. There's sort of levels into the A plus. So sometimes you might see me say, "Yeah, this is an A plus," but it's more like a B A plus. Like if there's different ranges within the A plus. The best setups are when you have price coming out of a reversal zone, either bullish or bearish, and then you have the 50 and VWAP uh, pretty close to that reversal zone. And it makes structure and a gap all within like sort of just coming out of that zone. Those are always like the best setups. So this one reason why it's not the best is time of the day, and these are kind of far apart. So let's just look at another one because I want to give you an idea on why you shouldn't just take every sort of A plus setup you see. So, okay, so we have it here again, right? So price came up, tapped into the reversal zone, crossed over 50, crossed over VWAP. Now, since it did that, we're going to look for a gap. So the first bearish gap after it crossed was right here. I'm pretty sure there's nothing up here. Nope, there is a gap here, but it's above the VWAP, so it made the setup before it actually was able to cross the VWAP. So if we were to mark this out, this stop loss is extremely big. And this did, however, fall into our window that I like to look for these setups. So there was your A plus right there. And this candle right here did in fact tap into that gap. So you would be in this trade right here. Let's see, it got close to TP1, and then it's sort of just, I think, just kind of consolidated for the rest of the day. Yeah, I mean, you're pretty much in profit majority of the day. But this is a huge stop loss. So when we're talking about A plus, they're not all created equal. Something like this, when you see a huge stop loss, I'm not trying to risk $2,000 on a single trade, especially not with the type of consistency that I'm looking for. So what you can do is you can implement other strategies. For example, like the chop box, right? Chop box provides a very nice um, level for a reduced stop loss. So we still have our entry right here, but instead of going all the way up there for the stop loss, we're going to use this chop box right here. It's going to look something like that. And then we are going to use the top of the chop box as our stop, our new stop loss, and our same entry. And this is still 1200, still pretty big, but at least it's not 2000, right? So now if we look, that price actually got a little bit closer to TP2, but 1200 is still relatively big. So some A pluses you're just not going to want to take. It's going to be subjective, up to you. This one, I probably would have taken it on like maybe my personal account, maybe not even Top Step, because just I think I remember this day. I think we won a trade over here. I think we took a long over here, and then I think some people did take this chop box short, because we have some people who know the strategies very well, and they can actually call it out even while like I'm away or even before I see it. So some people actually like studied it, so that's good. But you have to decide on which type of A plus you want to take. This one ended up doing quite nicely. So it's kind of up to you, but this one was very nice. It actually just sold straight down. Let's look at another example of when price actually enters into a zone and then see if we get a setup. I want to see if we can get like a really good setup. So in this example, it's still the A plus. It's just kind of unorthodox. I think I've called that out in a call out before. What I mean by unorthodox is price actually came and crossed the 50 and VWAP first, and then immediately went into a reversal zone and out the other side. So in this situation, it checks all the boxes. It's just the order is sort of out of place, right? So let's see the results of something like this. The stop loss would have been here. We have structure right here, but we're not placing the trade inside of the reversal zone. We're going to wait for price to break it, and then it's going to be the first gap outside of the reversal zone after structure, after 50 and VWAP, right? So this is a gap right here, and our entry would be right there. And that's quite a big stop loss, but it did tap you into the trade pretty much immediately after, and it went on to hit TP1. So this is a perfect example of one of the rules, which is if the stop loss is big, you can actually just move TP1 and TP2, right? So instead of waiting for TP2 to get hit, you wait for TP1, and then you move up to break even. You shed some off of your position right here, and then you just let it ride out, and it would have took you out at break even at 3 p.m. So that is the unorthodox type of A plus strategy. And let's see if we can get like a nice one. If not, then I will go look into trades and come back with one. So this is another unorthodox one. We already went over that. We already went over this one because VWAP is too far away. So that's really not ideal. And this is at midnight. So, and you see the results, your stop loss would have been somewhere over here. And of course, that would have lost. So you look at the losers in the time of day. There's a reason why I look for that window. So I hope that you're able to see that now. But let's just go on here. Can't see nothing. All right, let me. All right, so here is one that I found that we actually took on September. If we look here, can y'all see that? Yeah. So if you look here, boom, TP5 hit. It's actually was the second biggest A plus trade that we took on September 11th. So let's go over that one real quick. So this one, the prices are different because the contract changed, but the move is still the same. So if we look, price came and there's actually 3 reversal zones here. So what was the bias this day? Let's look at that real quick to see if we were trying to go for longs anyway. So if we look at here, right, and the high is here, and 2, yeah, this one didn't even have a good London didn't do anything. It didn't take out the highs or anything. But we did have some news. Looks like a news candle right there. Is that 8:30? Pretty sure it is. Yep, right at 8:30. So there was news this day. So there really wasn't a bias. It was just going to be like sort of manipulative. So, but we still follow the plan, which is wait for a setup to happen. And between our window, which is 10 a.m. and 12 p.m. So if we look at 10 to 12, that's what I like to look for setups anyway. 12. So that's usually like the window that I like. So what happened between here? So price was moving, but between this time frame, price never actually tapped the VWAP. So even though this was a good sell, I wasn't interested because price never tapped VWAP or the 50. So now we actually got some good. You can actually even see it, man. This is had nothing to do with the A plus, but you can kind of see like price rounding. This is how you can tell. I don't have a circle to it, but you can kind of see the bottom like rounding, making this sort of circle right here. That's a great indication on getting into a trade if you ever see that. That's just a little pro tip or whatever. I don't even think I paid attention to that when we took this trade. But anyway, what did Price do? Price came and took this reversal, but VWAP was still too far away, right? And then finally, these two got close together, right? When Price came back over here, and then we actually got a really nice setup. Which one did I enter in though? I think I entered in a little bit different because the move was already happening. So if we look, this is what I did here. Yeah, I figured that. So sometimes when you have these reversal zones, I probably shouldn't be telling y'all this on this type of call, but let me give y'all all of the tea. So whenever you have like reversal zones that are like, these are like kind of evenly spaced and kind of perfect, but there's a lot, so price is going to kind of play ping pong in between them. Sometimes what happens is I wait for price to come, like an unorthodox A plus. Price came in this reversal zone, crossed the 50 down here. So we have a lot of boxes already checked. The only thing that was missing was VWAP. So I was waiting for price to close above VWAP, and then I wanted to take that setup. So this was my entry, even though it was before this reversal zone. This reversal zone didn't have a say so in anything because I was basing everything off of what's going on down here. The last key to the puzzle or piece to the puzzle was VWAP. So as soon as that happened, my entry was, my stop loss was here. My entry was right there above the VWAP, and that was the trade. So this is the one that we took, and it was a beauty. So we had, it was a really big one, um, also, and I told people, if I could find the message, but I told people like this one's going to be risky because we didn't have anywhere to make it as short, a smaller stop loss, right? We couldn't shorten that risk because it just wasn't any sort of, it was too many bullish candles. There was no sort of consolidation. I mean, I guess you could have put it a little bit here, so to say, but I kind of just let it play out. Um, and it paid off. So we only went into 545 bucks of drawdown at one point, and that was the same candle that tapped us in. So as soon as we tapped in, we were immediately down 545 bucks. So that's another reason why I strongly suggest not using Apex, because Apex, depending on what size account you have, may not be able to handle that. But price did end up hitting TP2 right around 1241. So that was about 45 minutes after we entered the trade. And then once price got up to here, we took some off the position, majority, and then we moved our stop loss from here to break even. Then once that happens, it's just free money at that point. So you just let the trade play out, and then it went straight to TP3. After that, once it goes to TP3, now I move my stop loss from TP1, or I'm sorry, from break even to TP1. And then price got up to TP4. I move it again from TP1 to TP2. And then price smashed through TP5. So this was actually my biggest, it was actually my biggest trade. Yeah, ever that day. It was a pretty nice day. Yeah, that was my biggest trade because we already secured like 3,700 right here, and then I actually ran two minis on this one. So I took one mini off, and I took um, the other one off up here. But I could even let it run all the way, but it's another story. Uh, but this is why you want to let the trades play out and kind of want to leave like a runner. So if you are running Apex, you want to be able to do like two micros. That would be perfect, because even a day like this on two micros, you would have made at least 940 bucks plus 376 bucks. So 1,200 off of two micros, which is like unheard of. But so yeah, this was like one of the better A plus setups. And yeah, so let's try to find another one here. So I want to find one during yeah, here we go, during New York session. So price came through. It's tapping everything, so you know that A plus is actually possible today. Once you have a reversal zone and you see VWAP and 50 all sort of close together, remember I told you that those are the ones that I really like. Those are the good setups. So we look past 10. That's my little window that I like to start. And then I want to enter in before price gets to uh, 12 p.m., right? So this is my window of opportunity right here that I like. So we actually had price come back. Where is it? Price came right here. It crossed over 50, crossed over the VWAP. Outside, it made structure, reversal zone, went through the reversal zone, made structure, right? So stop loss, entry right there on the gap. I'm gonna draw out the gap for you in case you can't see it. It's actually right here. And then we got tapped in right here on this huge candle drop. I think we took this trade, but price came back up to hit TP1 for 1300. And this was one of the ones where you would change out TP1 to TP2 because it's quite big. And especially if you're copy trading, like 1300 is plenty across even 5 accounts. It's a lot. So, yeah, that was one I'm pretty sure we took. Let me see. On the 12th, did we take that trade on the 12th? Let's see. A plus buy. Oh, there was another one. This one was on the 9th. But let me see the 12th real quick. The 12th. Yeah. We actually took that one. 12 closing my accounts. Yep. Let's see. I said it. I was closing my accounts here at TP1. Oh no, I closed my Apex. Oh, so I took Apex on this one and I closed it at like I guess what is this? 400. So I let that one and then I let my other props top step. And yep, TP1 trade update. I'm still holding. I just stayed in this trade. And I guess TP2 did hit. I think the price numbers are just different now. But anyway, yeah, TP did hit for 1,000. So yeah, and this is what it looks like. And then there was one on the 9th. Let's look at that one real quick. So this is the 12th. I think the 9th is the one we just went over. I'm actually talking like y'all are right here listening, but this is a recording. I'm tripping. So the 9th is right here. Uh, 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 9th. Let me just do this. Right here. Yep. All right. So the 9th, I'm pretty sure we took this one. So yeah, everything is pretty close to the reversal zone. And my window's right here. So I think we were looking for longs on the day. So when we're structure. So let's get our drawing tool and boom, crossed over everything. We got the gap, and this was a good entry right here. And yep, TP2 for 1840. We would have moved the rest up to break even. It would have took us out at break even, but we already secured what we came to do. So yeah, that was a nice A plus as well. But yeah, so overall, that's how the A plus works. I think we went over quite a few examples. Um, yeah, I probably talked your ear off now, but yeah, this one was pretty good. And yeah, if y'all have any questions, we're gonna do some one on ones anyway. So yeah, I will answer all your questions in the one on one that you book and schedule, and we will go from there. I hope y'all found some value in this. Now, just keep in mind, if you don't understand it, it takes time. This is one of the more advanced strategies, so don't beat yourself up if it doesn't make sense. It will when it comes with time, right? So, all right, I'm out of here. I've been talking a lot. See ya.